It was a busy weekend from a geopolitical standpoint. It's Monday, March the 2nd, and this is Markets with Megan. If you like this podcast, subscribe, hit the alarm bell, share it with your friends, family, or colleagues. But we're here today to break down some of the information we received over the weekend, specifically around the coordinated attack from the United States and Israel on Iran. Now, we have often been talking about some of the looming risks this year, and we knew that the U.S. addressing the global risks with Iran was something on the table. We just didn't know the timing. So here we are. We do have this operation taking place right now. This has spread into a bit of a more wider Middle East conflict. And we want to address specifically what it means from the investment standpoint. Let's break down the reaction that we've seen in the markets today. As we would expect, oil has been a big beneficiary of this, meaning that the oil prices have risen. We've seen oil up about 6% today. It was up higher than that over the weekend, but today it's up about 6%. It's the highest that we've seen since June of last year. Natural gas as well is up about 7%. It has come down from its overnight high, but it is up about 7% right now. And that's because 20% of the global oil runs through the Strait of Hormuz. And this is something that Iran has threatened to shut down. So any disruption in this strait does cause an increase in commodity prices. We've seen from an equity perspective that equity markets opened up significantly lower, but we have settled down quite a bit. We're down a little bit, but really fractionally for the day. Energy stocks are up big. They're up about 1.5% on the day alone. And as you would expect, when energy rises, that does take discretionary spending out of consumer pockets. So we're seeing discretionary stocks down about 1.25% on the day alone. Now, U.S. equities have been able to recover a bit today. International equities, specifically in Europe, they did end the day lower. We'll see how they open up tomorrow. But higher oil prices also does translate into the risk of inflation. So we've often talked about the risks that we see to inflation this year. This does compound that risk. What we've seen from the inflation expectation component, we look at break-even rates in the Treasury market, short-term break-even rates, and that's on 2-year tips. That's jumped to 2.9%, and that's the highest we've seen since April of 2025. And again, the safe haven of gold also is back up and closing in on its record high. We are seeing higher interest rates, and that's strictly because of the increase we've seen in commodity prices and what that means for inflation. Higher inflation means higher interest rates. So this is all very fluid situation. We don't think we're going to get a resolution overnight. This probably will take several weeks. So we will see markets on edge as this continues to materialize and as we get more information on any supply chain disruptions and any disruptions from the oil markets. But that's all we have today. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.